Hi everyone, let's look at my preferred high time frame and low time frame scenarios. We're on the high time frame. I'm looking at this diagonal over here where we then have a wave 1, 2, 3, 4 and eventually a wave 5 to the upside, where an interesting target is going to be the 2022 range highs for potentially liquidity grab and then a move to the downside. Now if you look at this wave 2, it bounced on the 0.5 Fibonacci, which is fine. It's a rare target for a wave 2 in a diagonal, but absolutely valid. Wave 3 hit the common target for wave 3 in a diagonal, which is the 0.786. Then in this wave 4, which is still ongoing, we have an expanding flat. So that's an A, B, C. And actually this morning after my morning update, I saw that wave B on the daily time frame did not close any candles above the 1.618 over here, which is taken from the high of this 3 to the low of this wave A over here, for then potentially this being a wave B, because the 1.618 is a rare target for an expanding flat wave B, but nonetheless a target. And then now a wave C to the downside, which then is an impulsive structure. So an impulse to the downside where the minimum target is going to be to take the low of wave A at 26.5k, the maximum target being the 1.618 down here, which is currently sitting at 24k. Now this is actually a very nice interesting area because there's a lot of confluence in this area, basically between, let's say, 24.3k and 25.3k. Because first, we have the resistance over here that we had for wave 1, which is then going to turn into a support resistance flip, because now here it's going to act as support. So this resistance can then act as support. It also means that in this diagonal pattern, this wave 4 is then overlapping the price action of wave 1, which is also something you like to see in diagonals. So that is actually very nice. We have a weekly order block here as well. And if I open my target boxes, you can see I have a yellow target box over here because it's an important one for this particular scenario, where we have multiple confluences in this area as well, as you can see. So this is definitely an interesting area for confluence. And also for a wave 4 in a diagonal, the 0.5 and the 0.382 fibs taken from the low of 2 to the high of 3 are the most common targets for a wave 4 in a diagonal. And as you can see, the 382 is right in the middle of this white area as well with all the other confluences. So definitely an interesting support area for a wave 4, where then the potential trading scenario will be, as price is coming down, to ladder the longs in this area, stop loss safely below, and then trading it to the upside where the range highs is going to be the main target. Now of course this is educational, guys, based on Elliott Waves and the scenario we have in front of us. It's no financial advice. Now if we then look at this wave 5, we expect another impulsive move to the upside in 5 waves, meaning a 1, 2, 3, 4, 5, with likely then wave 5 ending somewhere around the range highs over here. Also for a wave 5 is not allowed to be longer than the length of wave 3. So if the low of 4 is in, we know exactly how long wave 5 can be, because this is currently an estimation. However, every wave 5 that is shorter than wave 1 is valid. So that makes this again a very interesting target for eventually more downside to come. And also volume is very important in a diagonal scenario. And if we look at the volume was highest during this wave 1 over here. Then we had wave 2, where of course then eventually volume goes down. In this wave 3, the volume never got as high as it was in wave 1, which is exactly what you want to see, because as the longer the diagonal is going, the lower you want volume to be. Like volume should slowly decline while price is slowly moving to the upside. That's exactly what you want to see in a diagonal pattern. So basically my expectation, as you can see here, is that, hey, we had lower volume in 3, so one can then expect lower volume in this impulsive third wave of a wave 5, where this high over here that I drew is going to be lower than this one over here. And if I'm going to take a couple of vertical lines to exactly show you how I've drawn this, right, then we have the low of potentially wave 4 somewhere over here. Then if we look at the volume, wave 1 usually doesn't really pick up that quickly. So this wave 1 might be very low volume, maybe even like highest at the beginning and then slowly going down, which can be fine. Then we have wave 2, which is slow, and then eventually we have this wave 3. And if we then look at this wave 3, you can see volume should increase during the wave 3 with a higher amount of volume, but then likely to be lower than the highest volume in this bigger wave 3 over here. For then a move down again in a wave 4. So we then have this as a wave 4, volume going down again. And this is important that once we go towards the highs, and this is a wave 5, you like to see the high of wave 5 in volume be lower, usually in an impulse, than the highest volume made in wave 3. Now, there can be an exception here because there is liquidity at the range high. So if this wave 5 is going to be the wave that is going to take the highs, there's probably a lot of liquidity resting above this highs, which therefore gives a big boost in volume. So it could be possible that wave 5 might have higher volume than wave 3, but of course we have to wait and see. This is currently my preferred scenario on the higher time frame, and I gotta be honest, it looks very nice, very good, and we have to wait and see what price is going to do, of course, on the lower time frames, which is where we're going right now. So if we then move to the lower time frames and also have, of course, this lower time frame is then in sync with the high time frame count I've just shown you, we're looking for this impulsive structure to the downside, right? So we're looking at this to be then a 1, 2, another 1, 2, looking for that impulse to the downside. And actually, if I go to the 4-hour, you can see much better that the volume since the high has actually been picking up. The average volume over here is much higher than it was here as well. So volume is picking up while price is moving to the downside, which is what you want to see in an impulsive move to the downside. So if we then zoom in, 1, 2, 1, 2, currently working on ending that yellow 3. Now, as long as I'm not seeing a longer range form, for me, the wave 3 is not yet in, and this is still part of the wave 3 going down, down, down. Now, we reached the minimum target for me of a wave 3, the 1.618, taken from the high of 2 to the low of 1 to then the high of this wave 2 over here. But as you can see, a wave 3 can extend to much deeper targets. So the 1.618 is a minimum target. It can go much deeper, where another support area that I have in case we're going to break this one is going to be down here at 27.2K and 26 to 9K. So that is an interesting area. But eventually what I want to see is a longer and shallow wave 4, because what I wrote over here is this wave 2 retraced all the way to the 886, and it was a zigzag, which is a 535 wave move. Now, a zigzag move and a wave 2 retracing to the 886 is a short correction and a deep correction, which, if you follow the rule of alternation in Elliott Waves, usually means that wave 4 is going to be a more shallow but a longer correction. So as long as I'm not seeing a longer sideways structures that could basically match this short wave 2, so we have a short high wave 2, I really want to see a longer wave 4 before then moving down for the yellow wave 5. So at the moment, I don't think the low of this wave 3 and then a 1, 2 in yellow and then wave 3 is in yet, because I haven't seen a longer corrective sideways structure. Now after this then wave 4, we expect another wave 5 to the downside. It is true that the higher wave 4 is going to retrace, the deeper wave 5 can go. Then that is the end of the blue wave 3. So then we have this being a 1, 2. This is then going to be a blue 3. Then we have a blue 4 and then another blue 5 to the downside, where an interesting target for that blue 5 is going to be the target box as shown earlier on the high time frame, which is this one over here, with the different confluences, daily naked point of control, weekly naked, another daily, and all sorts of stuff inside this area between 24,850 and 24.3K. So this is a very interesting potential end for this wave 5 in an impulsive structure to the downside. As mentioned in my past couple of videos, do not try to catch a third wave. Wait for, of course you can try, I mean, but many people lose money doing that from experience, no financial advice. But if you have make sure you have a solid plan. If you want a long in a downtrend over here, have a solid plan, entry requirements, know your strategy, know your statistics and everything. Because of course the probabilities are higher that price is moving to the downside. But if you see what you want to see on the lower time frame, then of course one can enter and see how it goes. But as it stands with this market structure that we have, the shorts are generally preferred. Now the setup that we had over here is then still in play, and possibly this setup can be extended all the way down to the yellow target box, depending on how price is going to evolve. Because the weekend is coming, weekends are usually quite famous for ranges, so maybe this yellow wave 4 is going to start today, and then throughout the weekend we're just going to range, and then on Monday when we have this range, maybe on Monday we're going to wick the highs, take the liquidity of the weekend highs, and then eventually move down in this yellow wave 5. That could be an interesting expectation for the upcoming days as well. So I hope this video was helpful or valuable to you. Please check out the other macro and high time frame counts if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.